Hello there, welcome back. I hope you enjoyed my webinar last week where we talked a little bit about how Karen and I have invested in multifamily real estate and how that's really changed our life and secured our financial future. But before you get started down this path, step back and think about what type of investor you are. We're going to talk about investor profile and how you can make a self-assessment to really figure out what type of investor you are and what type of investments you should consider. So a self-assessment really goes into figuring out your goals and why you want to invest, how much time you have available, your money and financial resources, your network. By that I mean what type of people you have that you can call on to help you with this journey. Education, and I'm not talking about your college education, I'm talking about what type of education do you really need to really be successful in real estate investing. What is your core strength, and do you want to be active or passive in real estate investing? So before we get started with the self-assessment, let's talk about goals and your why. Some of the goals you may have around this new path of investing could be extra income on the side. Maybe you want to secure your retirement. Maybe you're even looking to retire early. Are you maybe looking for a new career? You're young and you decide that real estate is really the career you want to explore. Are you older and you just tired of what you've been doing for your whole life and this is a time for a change? Or are you looking to generate generational wealth to pass on to your children? But before you really dig into your goals, you also need to think about your why. What is the strong desire behind these goals? Is it to free up your time? Is it to travel more? Do you want to spend more time with your family? Do you want to work on your own dreams and not somebody else's dreams? And do you really want to give back? What other people can benefit from you making a better living and have some additional wealth? So the first item on our self-assessment is time. We all have 24 hours in a day. It's how we use that time that's important. If you have decided that real estate investing is the future for you, you need to figure out how you can free up some time to dedicate to this exciting adventure. So if we look at what we have available, most of us have to work, we have to sleep, we need to exercise so we can stay healthy. Hopefully we have time to spend with our family. We need to relax a little bit. And then we come down to the last one, which is the important one here, learning a new skill. How can you carve out 1, 2, 3 hours a day to learn this new skill? Maybe it's TV watching we can cut out. Maybe we get up a little bit earlier. Or maybe we find some way to and from work to listen to a podcast. Whatever it is, we need to dedicate time to educate ourselves and get motivated and move forward on this path. The next thing is money. What financial resources do we have available? Do we have savings to get started? Maybe we have some retirement funds that's sitting in the stock market that we can allocate better. Do we have some friends or family we can go and borrow some money from, private money? Should we go to bank loans? We'll talk more about how you can finance deals later on, but think about what are the resources you have available in terms of capital. And also think about risk. How are you risking your money? We should all have a conservative base of money that we have available for emergencies, 3 to 6 months of living expenses. Then we have a cautious second ring. These are riskier investment, but still fairly stable. That could be bonds or CDs and stuff like that. And then we have our risky outer ring, and this is where you would put your real estate investing, your stocks, and other similar vehicles. Again, I believe that real estate, while it may seem risky, in the long run has shown to be a very strong investment. Your network is another key item on your self-assessment. Think about all the people you've met throughout your life who do you actually know? You probably know somebody out there that already are investing in real estate. When I started down this path, I thought, who do I know? And immediately a couple of people came to mind and I reached out to them, and that really catapulted me down this path of investing. You may need attorneys, bankers and brokers, mortgage brokers, property managers, and contractors. These are all key people in your network when you start investing yourself. And that one very important question that I learned early on to ask is, who do you know that I should know? People want to help. So if you ask that question, they're going to put you in touch with people that can catapult you further down this exciting path. Education. Real estate investing is not really that difficult, but education is important. Without education, we end up making mistakes that easily could be avoided. So we got to learn how to evaluate a market, where to find deals, how to evaluate these deals, financial measures, how do we know if this is a good deal or not, proper financing, how do we go out and actually get a loan that can further enhance our returns. Do we need to rehab and reposition this property? Is it a little bit tired? We need to spend some money to fix it up. And how do we manage these properties? Do we self-manage or do we hire somebody to manage for it? These are all key things we need to look at when we want to get into real estate investing. So education is another important aspect of our self-assessment. One of the last things you got to think about is, do you want to be active or passive? The core decision to make is, do you want to be active? And by this I mean you go and buy the property, you find the financing, you rehab the property, you find the tenants, you manage it, whatever. That's kind of the very hands-on type of investing you can do. That may work really well if it's a small property in your local market and you have a few extra hours a week to deal with that. It is also can be very time consuming. You end up spending a lot of time working in your business rather on your business, and we'll talk more about that later. Do you want to be passive? And by passive, I mean you find a trusted operator that you can partner with, and you, in exchange for your cash, they will run and operate the property and give you a return on your money that you don't have to do anything for. Or is it a combination? Personally, as I mentioned, we have quite a few active properties that some of them we manage ourselves, some of them we have property managers on, but we also have a lot of passive investing through various retirement funds. And it's very nice every month to just get a check into your account and you don't have to worry about it. So that's the combination path that we have chosen. But you have to decide for yourself what really works for you. If you have found this overview to be valuable and you want to do your own assessment, I'll send you over a form if you send me an email to jens@opendoorscapital.com. We are opening doors to your secure financial future through multifamily real estate investing. So thank you for listening. Next week we're going to talk about whether you should invest in single family or multifamily. If you have any questions, go ahead, jens@opendoorscapital.com, or you can visit our website at opendoorscapital.com. Thank you for listening.